What's up, everybody? Michael and Coco here. Happy New Year! Welcome to 2021. You're watching the Daily Stock Market Brief. In today's video, we are going to be looking at some larger term time frames, get a good idea as to where the market is right now to see where it could really go in 2021. It's been a while since we've been on camera, but we figured we'd come on and say hello. Let's get into it. All right, welcome back. First thing I want to show you is just a yearly view, just to give us good clarity as to what's going on in the market here. Right here, as you can see, that's 1 year, this candlestick. Every candle here represents 1 year of data. Pretty crazy. We're looking at the SPY. Just look at how big this candle is. This is known as a hanging man candle. What is a hanging man candle? Well, hanging man candles are typically reversal type patterns when you see them on an uptrend. However, that doesn't mean that they're going to reverse. They always need confirmation. Ian from Adaptive posted this on his chart, a long-term S&P from the yearly time frame. You can see the yearly candle right here. And the last time that we had a hammer candle or a hanging man candle on an uptrend was 1982. So it's been quite some time. And you can see we never got confirmation, and we had a pretty big run after that. So we're going to get a repeat where we get a break up higher and then, or a monthly close higher, and then we just see this big, even larger run up to the upside. Well, we're going to be getting into multiple charts here today. We're going to be going over indices and some indicators. We're going to go over quite a few indicators, and then we're going to really kind of dive into a little bit different, the FAANG stocks, the fangman stocks also today. So like I said, let's go ahead and get to the S&P 500. But before we do, that's me. Obviously, you just saw me on camera, and that's my dog, Coco. We really appreciate the subscribers that came in last year. I've been doing this now for 1 year, and we appreciate when you hit that thumbs up because it helps our channel grow. Woo! Let's get into the S&P 500. This right here is the S&P 500 on the monthly time frame. You can see the broadening wedge pattern and what we had recently this last month. What do you know? A break above the broadening wedge pattern. This is a bullish sign. Couple things to keep in mind here. Along with the bullishness, you got the PPO down here, the price percent oscillator. Very bullish spread. Nice looking so far. Couple things that concern me is the technical overextension from the 5 EMA. We're 7% above, and this is one of the frequently tagged EMAs, and you can see when we get fully disconnected like this, we get pullbacks back into it. And then on top of all of that, we have an overextension from the upper Bollinger Band as well. Now, this doesn't mean that we're going to get some sort of snapback and just going to fall apart, although, anything is possible, obviously. However, if you are buying long into specific stocks, you want to make sure that you're paying attention to this specific level, because during overextensions, you can typically see more times of volatility in the very near future. So if we start getting pullbacks, where you want to look is right around 3,500, which is where the monthly 5 EMA is. Now, when the next trading month starts, we're probably going to see this move up a little bit. So you want to look for areas of prior resistance and support in order to tactfully enter into long positions. Here it is on the weekly time frame. We have a couple different trend lines of the broadening wedge, and we continue to squeeze higher. Now, like I said, this is just looking at price action mixed in with relative strength index and also the money flow. We look at a couple other indicators, but we're going to also bring in breadth and sentiment in the indicator section because it's going to really help us determine, what's really going on behind the scenes. So yes, price action. We're moving up. Everything looks extremely bullish. We broke out of some big areas of resistance. Look at the money flow index. The money flow index is just not supporting this really large move here. Then we have a negative divergence on the RSI as well. So it's something that we need to be very mindful of. Daily time frame. Well, really, we've been just chopping sideways for quite some time. Recently broke out of this little tiny channel. And the last couple hours of trading, we started to see a nice big bump up into the new year, creating another all-time high close. Awesome stuff. Way to end the year. Bollinger Band's still very tightly contracted, and you can see the on-balance volume as it's sloping down. We're seeing the price move up. Now look at volume kind of died off at the end of the year. Why? Well, we had 2 holiday weeks, so it makes sense. Now, a lot of people might be saying things like, oh, you know, you're always bearish, you're always bullish, you're always this, you're always that. Well, keep in mind, these breaks above the broadening wedge pattern I've been talking about for quite some time. This video was done a couple months ago where I kind of drew out where we were here. We said it'd go up, maybe down, and then we named it the big trap because what we could potentially see is an overshot of some areas of resistance. This is euphoric blow off top type of stuff. Not to say that it will come back down, but there's always a possibility that when we get these huge technical overextensions, you know, it has to revert back to the mean at some point in time. So just something to keep in mind. Dow Jones, let's get into this one. Dow Jones, we broke out of a strong area of resistance this not last month, but the month prior. You can see we came up to it, and then we finally broke above it. Now, a couple things I want to note here. 6.6% above the monthly EMA, the 5 EMA. So that's a pretty big overextension. You can just look throughout history. Okay, when did we last get fully disconnected? Well, we got fully disconnected with this green bar here, and boom, we reconnected back up here, and then we came back, right? Here, full disconnect, we pulled down, full disconnect, we came down, full disconnect, we came down, full disconnect, we came down, but these ones we kind of went up a little bit higher and even got overextended to the upper Bollinger Band right here and then pulled back. So we're right here at the upper range of the Bollinger Band, a big disconnect. We haven't seen one of these disconnects. 6.6% on the monthly. Price percent oscillator went to bullish. That is a good sign overall. So what can you do with the Dow Jones if you're trading it or if you're trading the industrials? Well, you want to look for pullbacks to areas of support, because if you buy in, you know, when, you know, the market opens up, you're going to notice you're buying it at the all-time high, and you never want to just buy in at the all-time high because it doesn't make quite technical sense to do so unless if that new high is being done on a breakout. So yes, we did break out right here. Now we're a little bit overextended. We got to zoom into lower time frames to really understand also, you know, where could be a good area to buy into the next potential rally. And looking at the weekly time frame, you can see here, you know, 2 rising wedges. You got one right here. We broke down through it, and you could see the previous support. It then acted as resistance. And same with the upper trend line here. Previous supports now acting as resistance. And these last 2 months, you know, or so of trading, you can see these are weeks of data. 1, 2, 3, 4, 5, 6, 7, 8, 9. You know, 9 weeks of data right here have been all respecting this trend line. This last day or this last week, you can just see one big bullish green candle. Okay, we're still above the 5 EMA, so that's bullish, but if we start breaking through those levels, we need to be very mindful as well. The price percent oscillator on the weekly time frame is bullish, but notice how the histogram is slowly dying off, and you could see the signal line kind of curling over as well. On the daily time frame, this thing is just so tightly coiled. You can see the Bollinger Band width right here just smashed down to a very low level, 2.25, and then you have the on-balance volume. It was sloping down, but we kind of just saw this little uptick, so that could be, you know, a potentially good sign. However, if I just made this a horizontal line, it still wouldn't actually support this drift higher. So a big move is going to be coming here. When Bollinger Bands typically get really contracted like this, they foreshadow upcoming volatility. And we've seen that through history. When they contract, boom, we see volatility. Contract, boom, big moves, big volatility. So we're going to break to the upside or the downside. It's really too hard to determine. We just closed at an all-time high. And like I said, we'll get into the indicators to help us really determine, okay, well, you know, what's the best move for me. And then the transports are important to look at while we're looking at the industrials because of Dow theory. Now, if you don't know what Dow theory is, you can Google Dow theory, but you know, in short, you have to look at the transports because they make up a big portion of the industrials, and we need both move hand in hand. Now, on the monthly time frame, this is a shooting star type candle, and we have a pretty big disconnect from the 5 EMA, monthly 5 EMA. So if we start breaking down the low of this previous monthly candle, and just notice this, like, look, it opened and closed pretty much in the same exact area, but it had price swung way up here to over 13,000, or just about 13,000, I should say, and then all the way back down and then back up again. So it's just crazy movement overall. So if we get confirmation of a breakdown and even a big red candle, that could show us some sort of reversal type looking pattern in the industrials. However, we have a lot of support down here. So this pink box, that is actually my target area. So if we start pulling back into there, that could be a good opportunity to buy in for long positions, and then obviously you have some stop losses as well. Now, what's crazy is the last 2 hours of trading, which is what really drove the industrials high. So this is me imitating the industrial average in the final hour of 2020, just going straight up. Let's go into the Russell 2000. Russell 2000 monthly time frame, large picture. Okay, resistance, resistance, resistance. It respected the resistance this month. Are we going to break above it? Well, when we get these, just look how aggressive of a move this is in 2020. Just from down here, pretty much vertical straight up, at least these last 2 months. You can see the price percent oscillator down here. We're using 110, so it's disconnected from the 10 moving average by a huge percentage point. And when things get overextended like this, it's like one of Farrell's 10 rules of investing. They typically revert to the mean. So are you going to be buying in at the top? Hey, it might work out for you, but the risk versus reward for me doesn't make quite much sense. Now, on the monthly time frame zoomed in a little bit, you can see how disconnected are we from the 5 EMA, over 14%. So this one is very overextended. We have a monthly close above the upper Bollinger Band as well. So just a lot of technical overextensions in the market. So it's just very difficult to be able to position yourself going into the new year. And, you know, it just adds to the layer of confusion of what you should be doing. Is your strategy working? Should you be adding more? Should you just be ignoring all of this? But we'll get into some indicators to kind of help us determine, you know, what are the next steps, and I'll talk more on the conclusion section too. Here's IWM on the weekly time frame. Money flow index overbought. You can see that right here, and you just look at this aggressive move, week after week. Now, what you're starting to see right here on the Zoom thumbnail, this big red candle, this is some dark cloud coverage. So we opened up, and we basically didn't go any higher, and we just closed a lot lower, probably around halfway into this last previous body. That's known as dark cloud coverage, which is a reversal type candlestick pattern on a very aggressive move to the upside, but you still need, once again, confirmation. Now, when the money flow gets overextended like this, in oversold territory, what happened the last couple of times it did this on the weekly time frame? Well, we had a 9% drop, and then over here we had a 5% drop. So we need to look for areas of support to buy into if we start seeing this pull back. And like I said, on the monthly time frame, if we get technical reconnects, there's resistance, strong breakout, and you have the 5 EMA here. So 170 could present itself as a good buying opportunity to potentially see if there's more legs to the upside in this specific move. Now on the daily time frame, rising wedge pattern, we broke down through this rising wedge, but we're still technically above the 20 period moving average. So that is good, but we're still below the 5 EMA, which is interesting because it doesn't typically stay there, as you can see, very long at all. Disconnect from the 200 period daily moving average. It's probably the largest in history. I think I've already looked at that. So it's a huge disconnect from this Godfather moving average. And then you got the price percent oscillator turned down. That is also bearish. So we'll see how this one plays out. 2 hour time frame. This is what we got to watch out for, okay? So you have a little left shoulder head, right shoulder kind of forming. We need to see it test this previous low right here, and that low was at 193.50. Okay, we need to see it go and break lower than that to actually put in a lower high and a lower low. Until that happens, this trend is still up. Now let's get into the fangmans. I'm not going over the NASDAQ today. The NASDAQ was one of the strongest performing, at least the NASDAQ composite, strongest performing indices out there. Now, people are asking the question, you know, will the market continue to just rally and ramp? And, you know, will the Fed printing money, will it keep going higher and higher? Does debt even matter anymore? Blah, 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 all this stuff. Well, I want to look at the fangman stocks because the fangman stocks played a huge part in holding this market up and propelling it forward throughout the year. So we need to see where the monthly levels are on these stocks. And by the way, you probably are wondering, what is fangman? Well, you've probably heard of FAANG, but we're adding another element, obviously. So you got Facebook, Amazon, Nvidia, Google, Microsoft, Apple, Netflix, you know, just the big tech stocks here. So let's go ahead and go through it. So in order for the market to really continue to move, these fangman stocks are really going to have to press through these areas of resistance and add to their just already absolutely bonkers market caps that grew over this year. All right, so I'm going to quickly go through these. Facebook has to crack above 300. Okay, we have to continue to build. It's been actually consolidating sideways, so we need to see one breakout to the upside, but be careful on breakdowns to the downside. So these are just the technical levels that I'm looking at. We're looking at 260 for support, 300 for resistance. Then we'll go to Apple. Apple got to get above that 140 marker. Apple's a huge player in these indices, so we need to see this thing continue to move up higher. But you got to be careful. A breakdown through 105 could send us lower into around 80 to 85 range. Also, call out negative divergence. Overall, though, bullish, okay? Trending up, kind of doing this little cupping pattern here, but we need to break through that resistance or continue to consolidate, and which, by the way, if we consolidate through, most of 2021 without breaking up, how high can the market really go without the strength of these companies helping move it forward? It's going to be interesting to see how that plays out. NVIDIA, semiconductors, okay? Semiconductors had a huge role in how big of a move the NASDAQ composite moved. Because the reason why is because the semiconductors make up a huge portion of the NASDAQ composite. So if we don't get the big players, the semis, playing for us for the NASDAQ composite, well, they're not going to see these type of gains. They can't. So NVIDIA, big one, okay? Market cap, 323 billion, okay? Got to get above 600 and start seeing those technical breakouts. But watch out, because if we start breaking below the 5 EMA and these previous lows on these candles, I'd say 450 is still safe. But if we start breaking through those levels, we got to be careful, because we can fall back to, around 300 from a technical standpoint looking here. So are we going to consolidate through 2021 and then eventually break out? Very strong possibility. But if we consolidate for the most of the year, where does that leave us as investors in these big indices? So you got to ask yourself those things. Google has, been just a strong performer this last month, though. That's not the greatest looking type candle. It's a kind of a spinning top type candle above the upper Bollinger Band. Look, I just marked out 1700. If we start getting below 1700 and even below the 5 EMA, which is just a little bit below that, it could spell out trouble for Google. You can also draw a diagonal, resistance line from, back here in mid 2019 and just draw it straight up. And you can see that this has all been acting as resistance here. So when it tagged into it, it moved down, tagged into it, moved down, tagged into it. Is it going to move down, or is it going to consolidate here sideways and hold this 1700? We'll find out, right? I will say the MACD looks very, very strong. Market cap, 1.8 trillion, crazy. Microsoft, 1.68 trillion market cap, consolidating very nicely here. So, and is bullish. It's not overextended from the upper Bollinger Band. No negative divergence right here, because this was actually a higher high than where it's at right now. The MACD is trending bullish. Microsoft actually looks pretty strong right here. If we start breaking above 230, I personally might even buy into some call options, some long-term call options on this. So keep an eye out here. If we start breaking below, let's call it 200, then maybe let's pump the brakes a little bit, see where the rest of the market is. Amazon, also a big player this year, 1.63 trillion market cap. And this is all according to stockcharts.com. This is, the reporting might be different in other areas. I don't really know, but I'm just reading right off the full quote on stockcharts.com. Now, we got to get above 3,600 in order to really start seeing some technical momentum continue for Amazon. And as I see it right now, that's the area of resistance. Where's the support? I'd say just below 3,000, maybe 2,800 to 3,000 is that technical level of support. So we want to hold that area, and we want to break out through the upside here on the monthly time frame. If we're not getting these levels broken, where will the market be? You got to ask yourself that. If we don't have the big players contributing to the upside, what's going to really drive us? Is it just going to be small caps? I don't know. Looking at small caps, right? They're already super overextended to the upside. Netflix also been consolidating sideways right here, right? What do I want to call out? Well, first off, this is actually not a negative divergence. I don't know why I marked that as a negative divergence, but I did. Actually, let me see. High, nope, that's a little bit higher. Yeah, this could technically be, man, I don't know. But I will say the relative strength here, when you're looking at this month, it was pretty much similar, so we can call it what it is. Now, resistance, 575. Support 475. Got trading these last 1, 2, 3, 4, 5, 6 half of a year in this just back and forth channel. All right, so 6 months, it's been trending basically sideways. We need to see technical breakouts to the upside, or, if it continues this consolidation or even potentially breaks down, this is a big player as well. So got to pay attention to this. Now let's look into some indicators. We're going to go through the indicators fairly quick. I'm trying to keep this video to, somewhat decent, but man, it's been a long year, I tell you. It's a long year. This is the Pring bottom fisher. We talked about this crossover and matched it up to these two crossovers. One resulted in a squeeze and then a correction. The other resulted in a squeeze and a correction. This one, well, it really hasn't done much at all right now comparatively to the last couple of times. And it's starting to curl its little tiny signal line over very slightly here. Cause for concern? I don't know. This is really good for finding market bottoms and overextensions when it's below the black line and the green line, but I've been looking at it lately. Now, the market's been making all these new time highs, but what are the BP NDX and the BP SPX telling us? These are the bullish percent indexes, okay? So it tells us, what percent of stocks are on buy signals based on point and figure charts. So 78%, but you can just look here. Okay, we're making these new time highs on negative divergence. So yeah, the breadth it's not really being supportive right here. Then you have the SPX, BP SPX. Hey, Coco, come on now. Shoot. The BP SPX, this is showing us 72% of the stocks in the S&P 500 are on buy signals. Look at the RSI right here, just kind of sloping downwards as the price action continues to slope up. These are all causes for concern, so we got to keep an eye, just watch what happens at these specific levels. Then this is the sell signal. Saw a little tiny uptick. Now, pay attention to the purple line shaded in the background. You can see this spike up towards the end. If it continues to hold those levels, guess what? This is going to cross that red line. That represents the sell signal. And then we want to look at the CPCE on the monthly time frame. Yeah, we're way down here, and then we closed the month off, spiked up right here at 0.56. Still relatively bullish, but just keep in mind, if we continue that move up to the upside, it could be signaling us something. Yeah, market's making all-time highs. Look at breadth. Breadth is kind of weak right here, okay? That's not a good sign necessarily for these squeezes higher. Then let's take a look at sentiment. Sentiment, this is the bulls survey, and then you got the bears survey. This is the AAII. If you're not too familiar with what that is, you can just Google it. It's just a survey kind of going out to check sentiment. And then we have the ratio below. Look at price action continues to drift higher. We're seeing a negative divergence on both the surveys. So we have the bulls, the bears, and then we have the ratio down here at an extreme level with the negative divergence. You can see the red line when it gets above 2.0. It doesn't really do so frequently, but you can see right here there was a negative divergence. You can see that spike up. Boom, where were we? Then we went higher. Negative divergence, March crash, or February crash into March. Same thing here in 2018. You had to reach an extreme level past this red line, then a move up a little bit higher on the price action. This didn't quite reach our negative divergence, and we saw those pullbacks. So something to consider. Then we have the what are asset managers doing? Okay, the NIM exposure, and then we also have the RIDEX. Where's the money being taken? Where is it being put? Are they bullish? Are they bearish? Well, for quite some time we were extremely bullish, as the NIM exposure index was 100, if not above 100, because it could go above 100. That means they're using leverage, just full on bullish. But look at these last couple of weeks here, boom, 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 dying off pretty fast. Okay, so right now we was at 85, pretty 82, 97, significantly lowering itself right here as the market continues to move up. That's a negative divergence. Then you have the RIDEX was extreme bullish levels, and then we're seeing a little bit of an uptick here, breaking that kind of trend down. So, is that going to continue the spike up? Well, typically you can look at these hand in hand. When the NIM exposure will go down, you'll probably see the RIDEX kind of slide up. The higher these kind of like shift up, that's extremely bullish. When they start shifting down, that is bearish. And when things are very, very, very bullish, that means that they're exposed greatly to downside risk, if there is any. Then we got the NYSE McClellan Summation Index. This thing is kind of rolling itself over. You want to look for swing short positions when you're up at these levels. And then when you're down here, you want to look for swing long. So right now we're in these technical overextensions looking for swing short positions as the market's at all-time highs. To consider. VIX. What's the volatility index doing? All right. A little hammer candle right here, still kind of drifting lower. What did we say over here on this shooting star candle? We said probably just going to continue to see it drift down lower, maybe even fill this gap. gap going down into the new year. RSI kind of curling itself over. It's going to be interesting to see how this one plays out. Bollinger Band's extremely contracted. That foreshadows some upcoming volatility. Is it going to be to the upside? Is it going to be to the downside? I don't know yet, but to me, it looks like this little hammer candle, it's holding the falling wedge. The RSI is kind of curling. It looks to me like it's setting up for a move to squeeze up higher, right? I mean, that's just what I think. Now, okay, we're going to get into some ratio. These are signal indicators as well. This is some important stuff. This is stuff that I learned from Michael Gayad on his award-winning research papers. I had him on. I interviewed him here on this channel. This is looking at utilities over SPY, okay? And we're looking at the rate of change here. When the rate of change is below 0, that's a risk-on environment, okay? When it goes above 0, the following week after, you want to go to risk-off. What is risk-off? Risk-off means that you're going into utilities, or you're going into bonds or cash, whatever you presume to be risk off in that environment. That's the 4-week rate of change. This is one of the signal indicators that he uses in his research in his funds. Now, another thing I want to call out is the lumber to gold ratio. Okay, the rate of change. He uses a 13-week rate of change. I asked him, why not use any other? He's like, well, a 3-week rate of change does too. You can use a smaller time frame. However, you're going to be trading more frequently, which means you can be wrong more often, but you could be right sooner than potentially the 13-week. So 13-week. Okay, lumber's been great. Lumber's been just shooting up to the moon. It's probably going to have to take a breath here eventually, or maybe it might not. I'm not too sure, but when that thing falls, it can fall hard, as we've already previously seen. Gold has been doing pretty good too, relatively. So what can happen here? Well, first off, I want to call out this. The rate of change was way up here. Now it's right down here. You had it right here, up higher, and then you have this little negative divergence taking place. Does that matter? Maybe not. But what does matter is this little downtick right here. This means that the 13-week rate of change is sloping back down to 0. When it goes below 0, the next week is when you go risk off. So we still have a long distance. This technical indicator still represents that we are risk on going into the new year. However, when we look at the 3-week rate of change, and we've been monitoring this, what took place? We just crossed below 0. So what does that mean if you're a quick trader? This is telling us that it is a risk-off environment going into next week or going into this new year. So we've been risk-on this entire time, basically since middle of October-ish, okay? Catching this move up to the upside. Now we just crossed down below. Okay, last time we crossed down below was right here in September, and we saw that pullback. Interesting stuff. Does this mean anything? No, it doesn't mean necessarily anything, okay? I want to be clear here. This does not mean that a stock market's going to crash at all. This means that the conditions for the market to either consolidate or pull back are now, worse than they typically were. So in a risk-on environment, things are looking good, but when it starts crossing over, that's telling us, hey, there's traffic up ahead. The conditions for some accidents are greater than usual. All right, so just to wrap up everything here, we talked about a lot. Going into New Year, it's going to be interesting times, okay? We're breaking out to all-time market highs. We have a presidential shift. We've looked at seasonality charts prior and seen, weakness in February and some weird things take place in January as far as post-election goes. Right now, it's still a risk-on environment, meaning that the market continued to scream higher. However, as we've already noticed, some sentiment is signaling some other things to us. Okay, one of the indicators, like I just mentioned, we're going to risk off. That's a shorter time frame. It's letting us know that there's traffic up ahead. The conditions for a pullback could be very, very real. So going into the new year, I hope that this euphoria that's kind of just overplaced on everybody, that they're starting to slow down and realize, okay, maybe I made a lot of money. Maybe I should start capturing in some of these gains and start looking for more opportunities in other different assets as well. Okay. As the year progresses and going into January, I'm going to be coming out with more videos. I'm going to be doing more individual stocks, talking about setups and things that I see. I'll be sharing them on my website. I'll be posting them on my newsletter. I'm going to be doing all kinds of stuff going into the new year. That's the plan. That's what I'm sticking with. Thanks, everybody, again. It's been an amazing year, hitting 40,000 subscribers, 2.5 million views, crazy stuff. And, hopefully I can continue to just deliver quality content to everybody. And, if I can't, you got to let me know what I can work on, because that's why I'm here. I'm here to serve, to give you know, all my information that I learned, that I, you know, over the course of time, new things that I learned, and just kind of share my thoughts throughout all of this. All right, everybody, that's all I got for you on this video. Goodbye.